So the Bank of England base rate is predicted to stay higher for longer. That's not good news for fixed mortgage rates. I'm going to be giving you an update on the mortgage market in the UK at the moment. The bad news is if you are hoping that mortgage rates are about to plummet, then you are going to be disappointed. So I'm going to give you an overview of what's been happening and what might happen going forward. Now, I'll be looking at an article on the Money to the Masses website. There's a link to that article in the notes of this video. The data in there is updated twice weekly, so all the best mortgage deals, make sure you go and bookmark that for your own leisure. You can see that article on screen. It's called The Best Mortgage Rates in the UK. Now, if we skip straight down to look at the best 2-year fixed rate mortgages, since the Bank of England cut the base rate back in August to 4%, we've seen mortgage rates steady, and they've in fact started to creep up marginally in the last month or two. And the market now predicts that the Bank of England base rate, which does influence mortgage rates, will stay higher for longer. So the best 2-year fix you can get at the moment for 60% loan to value is 3.8%. That's about 0.1% higher than when I made the same video about 2 months ago. Just be mindful of the fees from the lender, £1,233 there. So something around £1,000 is typical. If you're looking at 80% loan to value, then you are going to get a 3.98% interest rate at best. You can see HSBC gives the best offer at the moment for 90% loan to value on a 2-year fix. Now, I do mention below that table the best rate you can get if you don't want to pay a fee at all, and that is from Nationwide at the moment at 4.15%. I'll jump down to the 5-year fixed rate mortgage deals. You can see HSBC offers 3.96% at a 60% loan to value. If you've got 90% loan to value, then you're looking at more like 4.19%. That's the same as the last time I made this video, but the 60% loan to value figure is marginally lower. So you get a slightly better rate than you could previously. But the general trend in the market is that rates are staying the same or pushing up ever so slightly. So that means that if you're hoping to lock into a new deal soon, it's very unlikely that the rates are going to plummet in the next couple of months. We do have a Bank of England base rate decision at the beginning of November, but the market at the moment isn't predicting that the Bank of England will cut the base rate again in the next month or even before the end of 2025. As I look now, the prediction for the market is that we're going to be around the 4% mark still into next year, and then it's going to get to 3.63% roughly at the beginning of 2027. Then it's going to creep back up to 4% by 2030. So the Bank of England base rate is predicted to stay higher for longer. That's not good news for fixed mortgage rates. For completion, I've got the 10-year fixed rate deals on screen. You're looking at 4.45% for a 60% loan to value with Nationwide, and also Nationwide offers 4.99% for a 90% loan to value. But what about the tracker deals that are out there? Tracker deals are static, as you'd expect. The base rate has steadied at 4%. The best tracker rate you can get at the moment is 4.11% at a 60% loan to value. When you've got 80% loan to value, you're looking at 4.14%, and a 90% loan to value is 4.54%. The best rate you can get without any fee is Nationwide, where you can get 4.99% variable. So you get 5-year trackers as well. 4.6% is the best you can get at the 60% loan to value. We do cover first-time buyer mortgages as well. So these are people who are going to have that higher loan to value. Realistically, on a 2-year fix, you're looking at about 4.45% at the moment. With the Skipton Building Society and with Darlington Building Society, you're getting 4.19%. This is assuming you've got a 95% loan to value over 25 years and you're borrowing £350,000. The numbers will be different for your own individual circumstances. Shortly, I will show you a calculator that can give you a more accurate reflection of the rates that you might get. When you're looking at first-time buyer tracker rates, you're looking at something like 4.74% over 2 years, and a 5-year tracker, you're looking at 5.29%. We do cover buy-to-lets on our roundup. I'm going to leave them on screen for you here. I'm not going to go through them on this video. As I mentioned earlier in this video, the article is updated twice a week, so make sure you bookmark it so you can see the latest rates. Now, if you scroll back to the top of this article, you can find a link to a mortgage comparison table where you can put in your own details to see the kind of mortgage deal you might get. So here's the calculator. You can put in whether you're buying a property or remortgaging and put the details of the property and the deposit or equity that you have. If you click search, you can then get a list of deals. You can screen them by whether you want a tracker, that's a variable rate mortgage, a fixed rate mortgage, and for how long you want the term of the deal, and also the mortgage term. And you will get a list of mortgage deals out there, so you can get something that's more appropriate for your circumstances. So again, we'll put a link to that in the notes of this video. So to sum up, the mortgage market at the moment is static. Rates are creeping up ever so slightly, and that's because of the concern about the fact that the Bank of England base rate might have to stay higher for longer because of inflation. If you've enjoyed that video, found it useful, make sure you hit that like button, but also subscribe to the channel.